So we have lots of takeaways. So be reminded of yourself, FHA, VA, USDA products can be done for the primary residences, and home style loan for conventional can be done for second home and investment. And this also applies on the refinance loans. So all the renovation, expansion, anything that requires to pull the permits, leading into relationship building to contractors to build a relationship to the homeowners and businesses. If you help their business to grow, our business will automatically grow. And reach out to Brenda if you need any credentials for Plaza Mortgage products. And before we finish the training today, do you guys have any questions? Yes,
I guess I have two questions. It wasn't mentioned, but is there a fee for each draw?
There is a small fee in between $50 to $750.
Okay, for each draw. Okay.
Yes.
And so I understand that there's a maximum draw. Does the contractor have to draw that maximum, or let's say they want to do maybe like 2 draws, 3 draws in between, that's fine, or it is 5 required?
Good question. The phases are depended by the construction itemized bid when you present. At the time of the initial underwriting, you create, let's say, we have a hard cost and a soft cost. Let's assume soft cost of doing the electric work and building the ground title survey work. Then at the first stage, even though you funded a $1.1 million loan, you're going to only receive 90% of the $50,000, right? Okay. $45,000 at the stage 1. And then from there, you apply the permit and second stage, third stage begins. Ground up, concrete work, leading into windows and structures. So the constructional idea, the fundamental idea is 99.99% same as the hard money loan. Main difference will be using a HUD registered consultant and HUD registered contractors. However, if you know a contractor who hasn't been registered themselves, it's okay. It's actually better. Help them to be registered and expand your business with their system, with their pipeline. Okay? And what was your second question, Han?
Do the borrowers have to refinance after this?
They can with better LTV.
Okay.
But refinance construction loan, after the structure is done, you would want to refinance.
Okay.
So what they say is the 203K can be refinanced with a streamline. So getting into it is difficult, but giving them a better opportunity after the construction is done is so much easier. And that's when we're going to have a great win.
Got it. Thank you.
For FHA specifically, since we talked about it, endorsement is around the corner. I received the second approval for Title II for the FHA. My goal is to finish the final approval by end of this month, which changes from our maximum rebate from 2.5 all the way to 900 basis points to 9 points with the same structure. We don't have any like ceiling or cap, just like the non-trade product.
One more question. Sorry, Peter. Did Peter get cut off?
Yeah. Oh, Peter, are you back?
I think the Wi-Fi connection is. Wi-Fi knows when we need to finish the training today. But anyway, I'm just kidding. Yes. What's your question?
Last one. When does the borrower start their repayment?
Repayment. Okay. So they only pay to the amount that they are lending. So let's say there are 5 stages. If we have took 2 stages, then we're making only for that portion. That's what I like about the construction loan is because they don't have to, even though we funded and recorded the loan at $1 million, they don't have to make the payment to all entirety.
Up to what they borrow. Okay.
Yes. And I don't know if you were catching this. Hard money construction loan doesn't have a specific timeline with beginning. That's why a lot of the hard money construction projects are stalled and stuck in the middle of nowhere because they didn't begin right away. With these first liens from Plaza, they regulate and mandate to start do the gravel works, put the hammers on from the 30th day. Within 30 days, they better start something. Otherwise, they're going to lose the entire loan. So this is another sense of urgency that we can make sure the project gets completed and they can exit out. And you may question, why is it better than HELOC or HELOCs for pool or roof renovation projects, right? Because 203K and homestyle renovation can also refinance. But those products are using as-is value, and LTV only goes up to 95 for the spring EQ. And 5-day HELOCs are only going up to 80% LTV. But with these products, you can go above and beyond 110%. You can give them more than what they ask. So you can complete and make sure everything is settled and move on. If they qualify for the 9% rate on a HELOan and HELOC, any product you give them today using these products will automatically approve them. That's what I like about this product too. Anything else? Okay, thank you for hopping on today. Have a great week. I'll be in the California office this week. So if you have any one-on-one meeting requests, anything that you were planning, please let me know. Thank you everyone again, and have a great day. Bye.
Thank you. Bye-bye.